Good morning. This is Andrew from My Investors Place. My Investors Place is a social network site for investors. www.myinvestorsplace.com. You can post your blog, join our forums, ask questions. We're in beta right now. We're just starting. That's why I'm making these videos. Hopefully you can join us, add your comments, add your questions, your thoughts. What I want to talk about this morning is about Warren Buffett, and it's a flight to quality. Possibly not a flight to quality all the time, but it is. How many of you purchased shares of Berkshire Hathaway last year when it was all over the news that the shares were $150? If you'd purchased the shares then, you'd watch them fall in August of this year to about $110. Rather unsettling. But last couple days, Berkshire Hathaway jumped to $147 a share. And I don't need to tell you this. I mean, you can look at a chart. But really all this volatility really means nothing in the long run if you're a long-term investor and a Warren Buffett fan and admirer, because he's really one of the most astute investors of all time. And that's what I want to talk about this morning. This was accentuated by this week's activity of Mr. Buffett, where he was buying shares of Goldman Sachs to the tune of about $5 billion. And he's not just buying the basic shares, he's buying the preferred with a 10% dividend. Berkshire also gets the warrants to buy $5 billion of common stock at $115 a share over the next 5 years. And put this into context, the shares just closed approximately about $125. So Mr. Buffett just had an instant profit of about $437 million, and that's not bad for anybody. I mean, even Mr. Buffett. Mr. Buffett last time invested in Wall Street was 1987 with Salomon Brothers, when they needed, or they begged him for a $700 million cash infusion to fend off an unwanted takeover. Another example, Buffett is ever the value investor. He picked up Goldman Sachs after its shares have dropped 42% this year. And taking it from the other context, the other side, Goldman, you can consider them possibly desperate, and really what it costs to them, to give up to Mr. Buffett this. But then, you have to put everything into its correct proportions, because what is the stamp of approval of Warren Buffett worth? Most investors have been so shaken from recent events, it's hard to find them anywhere, even under a rock. Now Goldman is flexing its bravado, where it's looking to offer stock to the public of about $2.5 billion, as well as one of Japan's largest banks, called Sumitomo Mitsui, is considering investing in Goldman as well. So what does this mean? Is the credit crisis over? Your guess is as good as mine. There's still some ever-present concerns about Goldman. They have tremendous leverage. For every dollar of shareholder equity, Goldman owns $23 worth of assets. That's basically 23.7 times leverage. That's kind of scary to me. Regulators permit 20 times, which I think in this environment is really not overly prudent. Just another thought. With Mr. Buffett, you need to be patient. In 1999, his shares were about 80,000, and they peaked at that point. And then they fell to 40,000 during the tech crisis. And it took until 2004 for the shares to come back to 80,000. So if you really want to be a long-term investor, you want to go to quality, you might want to consider Warren Buffett, and your patience historically has been rewarded. My name is Andrew Abraham. I'd love to hear your comments. You can post them and post your blogs on myinvestorsplace.com. That's www.myinvestorsplace.com. If you have questions, pose them on our forum. We're in beta. We're just starting. Let's start together. Thank you, and look forward to growing together. Thank you.